Hey everyone, it's Monday morning, January 13th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Cela. Since it's Monday, that means it's time to dive into the big market movers for the week ahead. It's going to be a busy one, so let's get straight to it. Before we begin, a quick note. Today's episode is sponsored by AMF Capital, Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. First, let's talk inflation. On Wednesday, the U.S. Consumer Price Index data for December will be out, and it's going to be a big one. Inflation has been one of the major risks for equity markets, and this report will show whether price pressures are continuing to ease. Economists are expecting a year-over-year increase of 2.9%. Now, this comes after Friday's surprisingly strong jobs report, which showed that the U.S. added 256,000 jobs in December, much higher than the forecast of 160,000. The unemployment rate also dipped to 4.1%. This robust labor market data has already pushed expectations for the next Federal Reserve rate cut to June, so this CPI report could add another layer of complexity. The Federal Reserve has been cutting rates since September, believing inflation had moderated enough. But with inflation still above their 2% target and new projections showing it could rise to 2.5% in 2025, the Fed might have to adjust its pace. Minutes from their latest meeting, also coming out Wednesday, could provide more clarity. These minutes might show how policymakers are weighing Donald Trump's proposed trade and immigration policies, which some fear could delay the return of inflation to the Fed's target. Switching gears to earnings season, big banks are kicking things off this week. We'll see fourth quarter results from major players starting Wednesday and continuing into Thursday. Strong investment banking fees, solid trading income, and easing pressure on deposit rates are all expected to make this a strong quarter for U.S. banks. Trump's election victory has also boosted expectations, with investors hoping his promised deregulation and tax reforms will drive profitability even higher. In fact, earnings for S&P 500 companies are expected to have grown nearly 10% in the last quarter compared to a year ago. Over in the UK, Wednesday's inflation data will also be in focus. After a sell-off in UK government bonds last week, all eyes are on how the new Labour government handles the pressure. British bond yields have been climbing, thanks to reduced expectations of Bank of England rate cuts, higher US Treasury yields, and extra borrowing in the recent budget. Economists expect UK inflation to have risen by 2.6% in December, still above the Bank of England's 2% target. Comments from central bank officials this week will also be closely watched for clues about their next steps. Now let's talk about China. Towards the end of the week, Beijing is set to release a wave of data, including GDP numbers, house prices, industrial production, and retail sales. GDP is expected to confirm that China hit its 5% growth target for 2024, as announced by President Xi Jinping. China's vice finance minister recently said the country has plenty of fiscal tools to support growth, and they're planning to step up spending this year. These updates will give investors a clearer picture of how China is managing amid looming U.S. tariff hikes. Lastly, oil prices. Crude rallied more than 3% on Friday, hitting their highest levels in 3 months. This comes as the Biden administration imposed its broadest sanctions yet on Russian oil and gas revenue. These sanctions target every stage of Moscow's oil production and distribution chains. Brent crude crossed $80 a barrel for the first time since early October, while West Texas Intermediate settled just above $76. With Trump's inauguration around the corner, many analysts believe these sanctions will remain in place, potentially serving as a negotiating tool for a peace treaty in Ukraine. And that's your quick look at the week ahead. We've got inflation data, bank earnings, geopolitical moves affecting oil prices, and plenty more to keep an eye on. Thanks for tuning in to Capital Markets Quickie. I'm Endrit Cela, and I hope you'll join me tomorrow morning with a brand new episode. Have a great week, everyone.